Meanwhile, of course, Fed officials expected progress on the taper threshold to continue. Let's dig into the finer details of the Fed minutes. Let's bring in our own Michael McKee, Bloomberg International Economics and Policy correspondent, head down, digesting what's being said in these minutes. And it does seem as though there's a split on what to do in terms of purchases of mortgage bonds. But really, this hawkish tilt, is it there in reality in the minutes?
A little bit. It's a reading between the lines situation, which it usually is during the minutes. But you look at their assessment of the economy, and they do see a continued improvement in the labor market, or they did. Remember, this is 3-week-old data. But there were a lot of companies in their districts that couldn't find people to work. Yeah. They also noted that inflation was expected to rise, and most of the inflation that they had seen was coming about because of the reopening of the economy, supply chain pressures as that moved on. But there was disagreement over whether or how fast we would see the inflation pressures dissipate. And so that leaves them in where they are for the monetary policy, and risks to the outlook remain, and they're very uncertain about what their forecasts are going to be. So while they are moving in the direction of at some point beginning to cut back on asset purchases, they're not there yet.
All right, so far the market reaction relatively muted to this. I am curious, Mike, when we talk about the Fed's focus, the idea here, guys, that the Fed is focused a little bit more on those inflationary pressures, the idea that maybe the transitory nature of what they had been sort of communicating for the last few months, that maybe it is a little bit more sticky, and maybe they were a little bit too slow, I guess, to react to this.
Well, they don't think so. They seem to think that their policy has been effective, and that much of the price pressures that we have seen came about in an expected way. They were in the categories that you would think, and that we have seen: used cars, travel costs, things like that. But they do talk about the fact that the substantial further progress that they wanted to see before they started tapering has not yet been met, although they expected that progress to continue. And I know Taylor wants to know about MBS. They say various participants offered their views on that, which really tells you a lot. But several saw benefits to reducing the pace of MBS purchases first, because the housing market is in really good shape, and there are what they call valuation pressures in housing markets. But others said that if you reduce the pace of Treasury and MBS purchases at the same time, that's preferable, because it would be aligned with the committee's previous commitments and communications that they would be doing that. So they said they would agree to continue assessing the economy's progress towards their goals and begin to discuss their plans for adjusting the path and composition of asset purchases. So they talked about talking about, basically, which is what Jay Powell told us on June 18th.
He's been talking about for a little while. Mike McKee, the breakdown of the minutes. We thank you. Meanwhile, let's get more perspective. I want to bring in Ellen Lee, portfolio manager at Causeway Capital Management, with $47 billion in assets under management. Ellen joins us from Los Angeles. Ellen, your perspective on where the Federal Reserve goes from here. It feels as if the market is having a bit of a concern about where growth goes. We're seeing the move we've seen in yields, the end to this so-called reflation trade over the last few days. Do you think that stays?
I think it's too early to tell. I'll just dovetail on what Michael just said. I think, the Fed is still watching to see how much of progress the economy is making. So I think at this point, we'll just have to see how third quarter plays out. But, the good thing is the market is aware of such range of scenarios. So we'll just have to wait and see at this point.